Good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for Thursday, the 23rd of February, 2023. All right, tomorrow's a big event with the PCE index. Why? Because the Fed likes it. So you're going to get personal income and spending, and you're going to get that PCE index. You want to pay attention. After it comes out at 7:30, you go on your merry way. It's done. Do I think it'll have the impact it might have earlier in the week? No, because so much data has come out all week long that just says the Fed has to go up in interest rates higher and longer unless there's some big change that decides to happen a couple of months down the road. I don't see it. The question, of course, is at the March meeting, do they go a quarter point, half point hike? And this report could be one of the nails in that coffin that helps decide that. A really hot PCE will do that. A moderate one probably keeps the market more in the 25 basis point range. Now, as we look at SPY, and I am going to finish up with SPY, I've been doing it all week, so, I'll decide tomorrow, do I keep it for the weekend chart or start fresh Monday? I'll make up my mind tomorrow. But coming down, you're into major support. I'll show you this in a minute. You have a pattern of a higher high, lower low with an outside day up. If you've taken my outside day course, you know the importance of an outside day. You don't want to take out today's low within tomorrow or the day after. Very important. I'm not going to explain why. Take the course. Suffice to say that the market's got support under the market at 393.13 and 390.09. We have a vertical price drop that might have culminated today with the outside day up. That could be it. And what number did it find support at? Let me think. What is that? Oh, there it is. The Bollinger Band. Just as I teach you in the enhanced Bollinger Band course. These two courses are so important. You put them together, you really get a feel for the market. What I think happened over the past 72 hours is the market has hit the Bollinger Band. It's finding its footing, if you will, for profit taking. I didn't say for new buying, for profit taking. And the reason is you're oversold, you're not embedded, you're down to an area on an algorithm called the Bollinger Bands, the black dashed line, where the market stays within them 95% of the time. And many trading systems are designed, I know that's how I would design one if I were doing that for you, that if you hit the band, you either take half profit or whole profit, depending if you're embedded or not, and then I give you a way to move a stop accordingly. So you come down to the band, it's the same identical thing. And if you think about it, the pros now take money off the table and they have now ammunition in hand. Do I want to sell more? Do I want to cover the other part that I left on the table? That's their decision. They have the ammunition to sell if they want. In the gasoline, I'm not expecting a big decline. I'll be surprised if you get under this number here. Now the futures chart looks the same when you look at it, and it's doing the same thing, coming back up, not getting under the Bollinger Band. Let's go to NVIDIA. Okay, so I'm dropping a few things. Now, we're not going to look at Disney for a while. Why? It's made its move. This is the new sweetheart of everything. And as you can see, up to the Bollinger Band. Now, would you buy the stock as it hits the Bollinger Band and it's not embedded? If you do, then you shouldn't even be watching me. I hate to lose you, but then you don't know what I teach. The first challenge of hitting a Bollinger Band and you're not embedded is where I teach that the pros on a first time, they will take the money off the table. This isn't long-term. Long-term will cover over the weekend when I do the weekly charts, and that's where I'll show you that one. I've already done the charts, by the way. Next, might as well look at Tesla for a little bit. So we've got the lower highs, lower lows. You have fallen back into the support. Markets had a phenomenal run. This is a market that at the beginning of this year, this is only February. At the beginning of the year, it was 100. It's at $202 right now. It has doubled in price. It probably needs a breather. Be careful. The market got up, couldn't make it to the Bollinger Band, to the 200-day average, and it's sitting here. It actually turns bearish if the market gets under 191.78. That'll give you lower highs, lower lows, and puts back into play more of a correction of 190.80. So is the market a buy here? In anticipation, it won't do that. Well, why? You've got the lower highs, lower lows. So the answer is no. In XLF, now you got the financials in an oversold condition going into the PCE number. You've hit the Bollinger Band and you've had an outside day up. You have a good inkling that the market's going to go much further lower if today's low's taken out because it's an outside day up. Again, take the outside day course and you'll understand the projections. In XLE, so we've had the first break in a market that's got a higher high, lower low into the Bollinger Band over the past 48 hours with an outside day up. I'm going to repeat. If the market takes out this low, you could catch stop orders. Now, it doesn't matter if it takes it out to change my theory that only 5% of the time when you stay under the Bollinger Band. You could come down there, have a brief break, and then come back into the band. Wouldn't surprise me. But there's nothing bullish. There's reasons to not be short anymore as you hit the lower bands and they're not embedded. There's no reason to be long. In stocks, just missed it. I was hoping you'd hit that band. But you are in a bear camp here. You're correcting an oversold condition. The resistance is 419.18. And I know everybody wants to buy this because they're telling you, hey, these AI chips, they're the thing of the future. You can see how NVIDIA's got the market lead and it's going. They do. But then you got the Intels of the world and you got the AMDs of the world. I can go on and on. So be careful here. Not everybody's made the same just because the word is a chip. In the home builders, well, we're going to get tomorrow some home sales. So I think you want to pay attention to that. Now, they're trying to come out with ways, many ways, the builders at 6.5%, they can find ways for you, and they will do it, where they'll help you pay if mortgage rates go even higher. They'll cushion things for you. You can refinance. They're going to get creative. How do I know it? I remember the 80s and the 70s. I was buying homes then. And I remember the rates were high, and I probably refinanced at that point a couple of times, and I'd had these deals. Now, today you get places like Rocket Mortgage and the like. They have these deals that you can look at. So start studying them if you're really going to be buying this spring, and understand maybe you pay a little bit more in a point, but you get finance opportunities. Why not go for it? I got to talk better. Right now, you got higher lows, higher highs in an oversold market. It's very close to its major support. That's not a reason to be bullish. The market ended this leg of the downside unless today's low's taken out. Take it out today or tomorrow or Monday, you got a problem in the market. Real fast, you'll be at the Bollinger Band, I think. If you rally in the energy sector, I'd love to get short up there, tell my clients to do so, but not in an oversold area. I want the market to correct that before I would tell them to do it. Do I have reasons to tell you that 3 days ago you should have started covering your shorts? Yep. Bollinger Band, not embedded. It's really simple. I can make a recording here. I wish I had the money that Kramer's got and you hit the buttons. You'd crack up from it. GLD, I'm bearish. Until you lose the embedded reading with the red line over 21, you want to be using rallies to sell. Now, I do think we're getting close to a cycle low. I don't know where it kicks in. Cycles are interesting. They can extend, they don't. You don't extend slow stochastics. It's more powerful than all the cycles you know about. And when it turns, it'll tell you. If you have an embedded reading and you lose it, bingo, lost. You tell me what goes on. I can show you this on charts over and over. That's why we created the course. In SLV, you're stuck at this 100-day average fighting right there. It's an embedded reading. I hate going short under the 100-day average the first time the market gets to it. You hadn't been at this 100-day average. Take a look. You have to go back to November. So I'll call that the first time in all of November, December, January. That's why it's fighting. It doesn't know what to do. But the bias is clearly to the downside. This market could easily get to 1933 before it's done. Isn't it amazing what copper did? COPX is smarter than the futures. It didn't throw out and get over this 18-day average. All it did is had a bear market rally back to that line in the sand, the resistance point, and collapsed today to the Bollinger Band. This is the short cover area again, but better than the futures, a cleaner chart. Now, TLT, what did we talk about? You're flirting right now with losing the embedded reading. When this reopens, you'll already have the PCE index in hand. You're going to know right off the bat, give the market the first 20 minutes or so, but you'll know. You'll be able to look at the futures. Is this thing going down or up? You've rallied into the resistance of the 100-day average. As usual, I tell you, I hate selling under that on the first go-around of it. Hadn't been there since here. It's not the same as being back in November. This is a resistance point. Does the market let go from there? In the dollar, bullish embedded reading. FXE, bearish reading. So you need a big change out of PCE to break these markets. Otherwise, you're looking at an important area that's probably bottoming out. Here's what is bottoming out too. If you want to see that Walmart report, today's the last day. At midnight, it's off our website. So how do you see it? You got iraepstein.com. Under the word research, it's there. You can move your cursor up here at any time. It'll be there as well. You'll see an icon. Give it a click. It'll take you right to the area. Next week, we're going to do a live webinar. I'll send out emails about the dates and time, and I'll probably get another special report of some type done over the weekend. You have a great one. I'm Ira Epstein. Talk to you tomorrow.